Hi, my name is Nick Quinn. I'm the CEO of FTUK and I hope you are doing well. We are going to look at a couple of core markets which I think are going to be pretty interesting this week. It's going to be a busy week. So if you've just got yourself a flex challenge, then we've got a couple of decent trades potentially that you may want to consider. At just $9 entry, you're going to need to pick up some trades throughout the week to actually start to pass that evaluation. It's not going to be too difficult, but if you're looking for some interesting opportunities throughout the week, we have got something for you. All right, let's break down the week ahead because it is going to be busy on the calendar. We've got central banks Wednesday and Thursday. You've got the Federal Reserve and the Bank of Canada on Wednesday, and then the ECB and the Bank of England on Thursday. No one is expecting any changes in interest rates, but obviously listen out for any changes in monetary policy. And definitely that is where I would have thought we will get the majority of the volatility for the week. Bear in mind as well that on Thursday it's month end, so you'll get a pickup in volatility there as well. So I would have thought that we'll get to Friday and we'll start to feel pretty fatigued. The key play at the moment is the US trying to force Iran to back down through economic pressure. And whilst I think that is still pretty optimistic of whether that will happen, the switch in there in terms of volatility in markets will be if there is a resumption in any bombing campaigns. So I'm going to focus on Euro USD for this week, given the central banks that we've got midweek. And it really would be relatively similar against the pound dollar, euro dollar, however you want to carve it up. But you can see the daily chart in front of you here. And it's this pullback that we've had that you can just see that we're sitting right in the middle of the range from January through to the middle of March. Now, I'm going to keep the overall analysis relatively simple. I don't think there's any need to complicate it. Always have that bigger picture in mind first. And if you look on a Fibonacci retracement, if you drop that over your swing high to swing low, what you'll see is we had a really nice pullback to this 618 area here, 118.27. That's a really important line in the sand for me to work with throughout the course of the week. Now, my own bias is to the downside. I'm looking for continued dollar strength here. What you've always got to remember with Fibonacci retracements is the level that you pull back to before continuation plays a role in understanding how much momentum you've got left in the move. And what that basically means for this particular move here is if we are going to push back to the downside, this is really the last chance. You know, anything past here now, and I would say that this Fibonacci has completely failed. And it will also mean that you're looking for this move to sort of maybe move to the downside relatively slowly. So the way that I would start to break that down is I would look for a measured move basically to the downside. And the way that I would get there is if you take the bottom of your Fibonacci tool and then just drop that over the top of the swing high at 118.49. And just flip that fib over, you'll see that it just gives us these really nice extensions to the downside. You see it there. Now, what I really like about this in terms of a technical structure is that you do get quite a nice measured move from the top to the bottom in the middle of March. And if you just extend that now from where we are, you'll see that tunes in really nicely in this area here. So it's 111.45. Now, I don't think they're necessarily going to get there this week, but this is the framework that you could use to inform your decisions as you drill down into the shorter time frames as you move day to day throughout the course of the week. So I'd have that downside bias on euro dollar with an overall picture move looking for dollar strength as the war continues and looking for those mid 111 areas. Certainly 112 I think would be something we could definitely look at as being a relatively optimistic target, certainly for now. The other market that I'm really interested in working with this week is the gold market. Now, finally, it's starting to quieten down and it's looking like gold is starting to become a market that's going to be a lot easier to work with for traders, whether you're on the bullish side or whether you are on the bearish side. Now, for me, I would keep it nice and simple. You can see we've just quietened down really nicely over the course of April, which is good to see. And with that dollar emphasis on the dollar to the downside, I think this is setting up to be a really nice soft move back to the downside. Now, classic bear flag, it's starting to look like we've got a formation on here on the daily, and I would keep it pretty simple in the way that you are painting it in. I would take this close down here from the 26th of March as my core point of where I would do that from, start to work with it, simply because the volatility on the 23rd of March is a little bit extended before the pullback, and so we've started to form that flag a little higher than the base created on the 23rd. So I would keep it nice and simple, and I would just paint it in and start to work with it. The great thing about a big bear flag on a daily or a weekly is that you can just drill into the shorter time frames and play both sides of it, because you can see how it is setting up in the bigger picture. Now, you see towards the end of last week, we've had a break to the downside. I suspect that could be a false break. These things are never technically that simple, and I would certainly expect at least some sort of a move back into this area. But still, you start to paint out that upper trend line, and you've got some great areas to work with. However you decide to see, you've got this beautiful set of dojis here from the 17th of March as upside targets at just over 5,000. So, if that's going to break down, I would see that there's better long-term buying opportunities around about the 4,000. But I think it's going to be a relatively easy market to work with throughout the course of this week.